May sales market update. It's been a long time coming. Welcome back, Guy,
Hi.
my brother, runs my Greenwich office, and Steve, my general manager for Blackheath and Greenwich. So today we'll be covering off how we've found the first third of the year and how we're finding the market currently across the various price ranges and different property types. It does vary according to property type and price range. So I think if you're looking to buy or if you're looking to sell, you should find that quite interesting. So make sure you keep watching to the end. I'll let you guys speak very soon, but just as a general background, inflation is at 2.6% at the moment, which is very healthy. The Bank of England brought the base rate down to 4.5% in February, which is great, and we're expecting a further reduction tomorrow, the 8th of May, which will be 4.25% hopefully. We have predicted this before many times last year. It never actually transpired, but it should happen tomorrow. We are hoping that that will be further reduced to 3.5% by the autumn and maybe even 3% by the end of the year, which would be fantastic. As a background to this, mortgage rates are being slashed across the board, with a lot of lenders coming in below the 4% level, which is amazing. We'll be doing a full podcast on this, which we're recording a little bit later on today with Tom, our financial services guru. So keep your eyes open for that. It should be very good. So we won't go into too much detail here on that. House prices last year in London rose by 2.2%. In the north, they were up by 5.7%. And this year, they're predicted to be 3.75% as an average across the UK and a little bit more, 4% in London. So I'll start with you, Steve. How have we found those first 4 or 5 months of the year?
Generally quite positive. Obviously there was quite a lot of pent-up demand and supply from last year where people were waiting for the rates to come down and a bit more sort of stability in the market. So we did see that sort of come out January, February. There was also a little bit of a rush on for the stamp duty holiday, which ended obviously the 1st of April, end of March. Although a lot of the sales that were aiming to get the exchange and completion done by them were actually agreed the tail end of last year.
Yeah.
But into January and February, there was still a bit of momentum, still people trying to hit that. So actually the exchanges for the first 3 months of the year, not so much January and February, but from March, we saw a huge sort of deluge of exchanges happen.
A
tsunami. It was, yeah, some of the numbers were staggering actually.
I think it was a surprising amount of people taking it to the absolute wire in March, which
it
was
was
incredible. And I've been saying to buyers and solicitors literally since the beginning of February, do not take it to the wire, get your exchanges over the line by the beginning of March, just to give you a bit of peace of mind. But most of our exchanges happened within about 3-4 days of the deadline.
But they did pretty much all get there in the end, which is great.
We got all of them there.
Well done. Yeah. And those that didn't, there were a few of them. It was predicted there'd be this like raft of fall-throughs, and
which
that
has
didn't happen.
not happened.
Yeah,
so all credit to sales progression by you,
yeah.
Nicola and Pat.
Yeah, Nicola and Pat in our office. It was the sales progression team were phenomenal. Actually, there was a lot of pressure on them that final week.
There was a lot of stress, and I'll be honest with you, I've never known so much stress with solicitors that we've been dealing with. In that last week, it was a case of like, look, just stop chasing me, just leave it to us.
They did a great job as well. I think everybody came together and just got everybody over the line: surveyors, building societies, solicitors, estate agents.
So actually, exchanges and completions for Q1 were very good. New sales agreed were fairly steady, probably in line with Q1 last year. What we have noticed though is just the level of supply in the market hasn't been great, and agents have been kind of fighting over stock. So you're seeing a lot of overpriced properties on the market, January, February particularly. But actually, if you get the price right, they are selling. So it is a price sensitive market. But actually lead levels and sort of new buyer registrations have been down. I'd say down maybe 10 or 20% from this time last year.
This is from the beginning of this year?
Yeah, January, February this year compared to the same time last year.
Jolly good. Okay.
And actually we've kind of seen that to sort of bring you more up to date. So March was a bit difficult. Obviously, we had politics over the pond dictating things in our financial markets and sort of bit of volatility that brought. Spring was very late this year. Easter was the last weekend of April. So latest I can remember it for a while.
Yeah.
So it's only now, I think we're only now starting to see that spring market come in. Obviously, it's no secret that the interest rates are on their way down. People have been waiting for that.
Yeah.
And we're all hoping, tomorrow is the start of that. But actually our lead levels, new buyer registrations are not where they should be. But what we are seeing now is stock levels are increasing quite quickly.
I think there was a natural lull after stamp duty went back up again. I think that would be expected, people reacclimatising, Easter, as you say. So I think as we start moving forward, we should start to see a buoyant summer market, hopefully.
Yeah, I mean, I think you mentioned earlier, I mean, quality of viewers seems to be very good at the moment. So although viewings levels are not quite where they should be, the actual quality of viewings are very good, which means offer levels are pretty good at the moment. I've also seen, I mean, since the Easter break, I mean, the market has had a bit of a pickup, and actually the last week has been very busy, certainly for offer levels.
Yeah.
Yeah.
Yeah, no, I'd agree with that as well. Yeah, we're seeing the same, I think.
Demand really did feel like it had dropped off a cliff a little bit during the course of last month.
Yeah.
I think it's fair to say.
Yeah.
And yet you did end up having an extraordinarily good month. I mean, it wasn't amazing, but it was very, very good.
Yeah. And actually it was in line with the 3 months prior to that as well. It's been fairly consistent. Our sales volume was within 1 or 2 sales has been the same for every month this year. But I think that just shows you actually that that quality of the viewer, as much as they're not the numbers that we would want, the quality is phenomenal.
I think we'll have a look at how we feel the market's going to progress a little bit later. But looking at the market currently, it is very different across the property types and the property price bands. I think you'll both agree on that. So Steve, what would you say in respect for that? Maybe start at the higher end,
absolutely.
Which is a strange market.
It is, and actually it's a bit of, so some of the data that we've got is it's a little bit sobering, maybe a little bit worrying, but again, I think it is improving. But during the month of April, there were 36 homes on the market in our areas. So Blackheath, Greenwich, Lee, the Green, Deptford.
In the higher band.
In the higher band, sorry, 1.9 million or over.
Okay.
36 properties on the market. We actually had the lion's share of those, which I'm quite proud of.
Yes, very good.
But between the 1st of March and the end of April, 24 homes were new that came to the market in that price range. So again, 1.9 million and over. In 2 months, 24 new properties came to the market. We had the joint, actually, mostly new instructions for that with 6. But actually, in terms of actual deals, only 5 sales were agreed in the whole month of April. All 5 of those are in SE3. There's actually no properties in Greenwich. I think the highest value property in Greenwich that sold in April, I think, was 1.5. So nothing over that has actually managed to find a buyer.
And that probably reflects what's happened throughout the year as well.
Yeah, well, actually, since Liz Truss really and the interest rates going sky high, the market sort of 1.7, 1.8 upwards has been really slow. There's been some magnificent homes on the market. We've got a couple at the moment, and actually our viewing levels are worryingly low. It's no fault of the houses, it's nothing to do with the property, it just shows you what that market is doing.
I think we are looking at an improvement in that, and it feels like that is coming already. And that is probably borne out by what's happening to the middle market, I think.
Yeah, absolutely.
At the moment, which is the buoyant part.
Completely. Yeah.
I mean, the middle market seems to be where the action is at the moment. So anything between sort of maybe sort of 650 to up to sort of 1.3, that's where we're getting the most interest and probably the most offers at the moment. But actually the lower end of the market, especially in Greenwich, in the shape of 1 and 2 bedroom flats, ranging between 350 and maybe 600, that is a more difficult market right now.
That is very true, and that's been the same for a long time, I think.
Yeah.
Although again, set to improve with interest rates coming down.
It is
worth more, and lenders softening their lending.
Yeah, it is worth mentioning. I mean, in that lower price banding, there's probably been more reductions this year so far than any other year I can remember on record. It's price reductions are rife at the moment, but we've already mentioned that there's some you know, I don't think it's us, but some agents out there who are overvaluing to get the instruction, which I'm telling my clients to be wary of.
I mean, Greenwich obviously is saturated. There are so many new builds, but correctly priced they are selling. Going back to the middle market though, we are finding that quite healthy. Buyer demand seems to be much better at that level.
Yeah, so for us, our probably our core market, sort of 800 to 1.4, is doing very well.
Lovely instructions.
Really nice, and sort of the period homes, I mean, Lee and Hither Green are flying at the moment.
You're still getting 20, 30 viewings,
but
multiple
houses
offers.
more than flats.
Houses,
exactly.
Yeah.
Freeholds.
Yeah. It's you know, that market's doing, obviously families looking to sort of upsize and so on. That area is doing very well actually.
So the quality flats are doing okay. The very high end flats maybe not so much, but it is very much at the lower end that we are.
Yeah,
the market is struggling a little bit, but again, priced correctly they are going.
It's
a
real
very
mixed bag.
competitive market.
It is really competitive, but it's a real mixed bag. I mean, there are some luxury flats that have actually performed really well. For downsizers as well, particularly.
Of course,
that market's there. That's
Ground
always very
floor
strong.
with a garden.
Yeah, very cash-rich buyers and are looking. Yeah, that market's strong.
Okay, let's move on to how we feel the market is going to perform as we move through the summer months. And I think you've been looking at some Rightmove stats.
Yeah, so something that does give me a lot of confidence that the market's there. It's just a matter of when, not if. I track click-through rates, so how many people are clicking on the properties each day. And I've been running this data for about 12 years, tried to look at different patterns.
His click-through rates.
I do like my click-through rates, I do like my spreadsheets, but looking at the patterns, the numbers that I'm seeing now are higher than they were in the stamp duty holidays. They were higher than when we had the Boris bounce, was it 2018, 2019, trying to remember now. The audience is there, they're just waiting, and I think as we move ahead this year and those interest rates, if they do go on the trend that we're all expecting, as affordability eases, I think the market's really going to come back.
Yeah.
I think there's going to be a lot of transactions actually for the rest of this year. I think from a pricing point of view, I think prices will remain steady. I'm not expecting big increases or big decreases. I think it's going to be a steady market, but it'll be a faster paced market. There'll be a lot more movement, I think.
Thank you very much, guys. I really enjoyed that, and I hope you did as well. We're doing the Renters' Rights Bill tomorrow, so keep your eyes open for that as well. Make sure you're following me on all my social media channels, Instagram, Facebook, TikTok. We're on everything. See you next time.